Guys, there was the very heavy selling on Thursday, and then there was the counter reversal on Friday. And because of this heavy counter reversal corresponding to the previous candle that has formed on Thursday, we are anticipating that the pressure will still be there on the entire US stock market. And at the same time, because of these the technicals on the daily chart and on the weekly chart, the market will try to sustain bullish. What it means, this simply means that now the S&P 500, Dow Jones, Nasdaq, and all of these indices and the entire US stock market has to struggle hard in order to go bullish, as simple as that. But at the same time, if the S&P 500 loses the support of these the moving averages and there comes two closings below the moving averages, then there will be the pressure, and because of that pressure there will be more and more fall. So I will discuss all of these, the bullish and the bearish conditions in this the S&P 500 weekly technical analysis. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis, which is from April 8th, that is Monday, to April 12th, that will be Friday. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. Weekly chart means the big picture. Yes, now because of these 5 candles, okay, we have seen something very strange on the weekly chart, okay, but still the S&P 500 is in the overbought and this is the saturated condition, okay. Second point of the agenda is the S&P 500 technical analysis on the daily chart. Daily chart means the short term picture. What we have seen or what we know on the daily chart, there is a very heavy bearish engulfing candle, and this, because of this very heavy bearish engulfing candle, there will be the pressure on the entire US stock market, and there will be certain conditions through those conditions the S&P 500 or the Dow Jones and the Nasdaq, they will be able to move up. Otherwise the entire market will remain bearish, and then this will be the beginning of the reversal cycle, okay. So this is very important, the reversal cycle, okay. This I will discuss, okay, some of the part here in the second point of the agenda. Third point of the agenda is the probable movement of the S&P 500 from 8th of April, which is Monday, to 12th of April, that will be Friday. So just like the last week, whatever I mentioned, that it was very much clear, absolutely clear, that until and unless there comes two consecutive closings above 39,800 in the Dow Jones, there will not be any more bullish movement in the Nasdaq or the S&P 500. However, if this condition fails, then there will be fall, and that's it. So that was just one condition, 39,800. Now there are some other conditions, okay. I will clear in this the last point of the agenda, that is the probable movement. I will tell you what are the conditions for the bullish movement, what are the conditions for the bearish movement, and what are the conditions for the reversal. Yes, okay, because of this extremely heavy bearish candle, if this candle is technically accepted, okay, this heavy bearish engulfing candle, and there is a probable slip is forming here. If this slip does not form, in that case most likely the S&P 500 and the entire US stock market is going for a reversal or is heading to the reversal, as simple as that. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for the daily and the precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the weekly chart. This is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week, okay. Now if you look into this, the last weekly candle, it's a good bearish candle, but because of the reversal, a counter reversal on Friday, we can see that although this candle is bearish candle, but there was a reversal and now there is a wick. This clearly indicates, and yes, there is one more thing, it came down, it touched the moving average or it breached the moving average, okay, and then but still it was able to sustain. So it simply indicates that there are bearish sentiments in the market, but still the bullish sentiments or the extreme FOMOing is countering these bearish sentiments. This is what this the candle indicates. Now there is one more thing, and what is that? This particular thing is the closing of these three candles. The closing of these three candles is below my extremely heavy resistance level. 3 weekly candles. Not even for a day the S&P 500 was able to clear or the close above or sustain above this extremely heavy resistance level. Okay, so because there is a very heavy resistance level and there are 3 consecutive weekly rejections, 3 successive weekly rejections on this from this the heavy resistance level, as I have conveyed to my Patreon community members. Okay, that see this is happening, and there will not be any more bullish movement until and unless S&P 500 moves to the other side, and we need 3 successive closings above this extremely heavy resistance level. Then only the S&P 500 will be able to move towards 353xx. Otherwise it will fail, and it will fail for sure. Anyways, on the weekly chart, we can clearly see 3 successive rejections from the heavy resistance. This clearly means the bearish sentiments are growing, and the bearish sentiments are getting heavy and are getting heavier. And these the bullish or this extremely bullish FOMOing, it might not be able to counter these the bullish sentiments, and now there might come one more heavy bearish candle, weekly bearish candle the next week. Now let's talk about these the technical indicators on the weekly chart. On the weekly chart there is nothing. Okay, yes, on the weekly chart, okay, a little has changed. What is that? As of now, moving averages and everything, MACD is all bullish. Okay, and stochastic RSI is a little bearish, but I will not count it as bearish because the K channel and the K channel and the D channel both are still more than 90. So I will not count it as bearish. Okay, I will simply look at it, or I will simply consider stochastic RSI as bullish. Okay, now, other than that, the overbought, yes, extremely overbought, and extremely saturated. Okay, or absolutely saturated on the weekly chart, and this clearly indicates, other than that, the saturation level has moved to the extremes. This is indicating that if the market considers the technical, then it must give a good bearish candle, a good bearish weekly candle in the next week. As simple as that. Anyways, whatever will happen or whatever will be happening, I will keep you posted through these the daily updates if you are my Patreon community member. And if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. And also guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, I have one more information to share with you, that this is my stock market knowledge transfer program. And through this program, I teach the movement, strategies, analysis, manipulation, technicals, predictions, support and resistance levels, and much more. And the motto of this program is to help you become self-reliant. And this program is delivered one-on-one basis, and once you learn the technicals and everything, analysis, predictions, everything, then this will be applicable to any stock, any index, any ETF, any currency, any commodity or crypto. Okay, and guys, this is my email address. Whenever you want to participate in this the program, you can simply drop me an email, and more details are there in this the Google spreadsheet. And if you see, this is the Google spreadsheet, and everything in detail is mentioned in this the Google spreadsheet. And other than that, these are some terms and conditions, very simple terms and conditions. These are the snapshots of the meetings. So guys, whenever you want to participate in this the program, this is my email address. And also I've given the link to this program in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Okay, so what you can see here on the daily chart, this is a good bullish candle. Okay, simply a good bullish candle, but it's not a heavy bullish candle. Okay, other than that, this heavy bearish candle which was formed on Thursday, 4th of April, this candle has engulfed 2 candles, so it's a heavy bearish engulfing candle. And this the last candle, the bullish candle which you are seeing here, okay, which was formed on Friday, this candle failed to clear the open price or the high of the previous candle. This clearly indicates that there are bearish sentiments in the market, although the candle is green. Okay, it looks green. There was more than 1% bullish movement on Friday, but still there are bearish sentiments in the market because of these conditions that I mentioned here. Okay, right? What it indicates? This indicates that any more bullish movement or any bullish movement will see some struggle. Okay, whereas if the market gives up, then there will be a linear movement, very simple, very clear movement, and we can anticipate more falls, more red candles. Okay, not a big deal, because now we are anticipating a reversal. Okay, so I will define more conditions of this. Anyways, let's quickly take a look at these technical indicators. But before that, guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And also, if you want to join my Patreon community in order to get the daily and the precise updates, precise probable movement of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. Now, in terms of the technicals, yes, there is clearly a change on this the daily chart. Okay, and what is that change? The change is that the closing is happening inside the moving averages. There is still a fan out, clear fan out supporting bullish movement, but the closing is inside the moving averages. Okay, other than that, the MACD is clearly bearish. Okay, and the stochastic RSI is also clearly bearish. If there comes one more red candle on Monday, in that case, this particular that you are seeing the change, that the change might happen, this change will not happen in the stochastic RSI. It will go bearish because the MACD is bearish, stochastic RSI is bearish. So what the technical concept says? The technical concept says that if the MACD is bearish or the stochastic RSI is bearish, then there will be pressure on the market. And if you notice, on this day onwards, on Tuesday, 2nd of April onwards, we have seen this particular pattern, and that is why. And this is what you can see in my these updates on April 2nd and on April 3rd, that the MACD and the stochastic RSI are now trading bearish. And other than that, if you notice that now, yes, on the daily chart, it is neither overbought, okay, not saturated. So considering all of these are technical indicators, what we can see here, that the S&P 500 on the daily chart is simply what? It is simply 60 or 65% bullish, only 65% bullish and 35% bearish. Okay, 65% bullish and 35% bearish. This means that the S&P 500 still has some chances to go bullish. Okay, but these chances will be there only or mostly on Monday. If it fails to go bullish on Monday, okay, or on Tuesday, at most on Tuesday, in that case it will come into 50-50, 50% bullish, 50% bearish, as simple as that. Anyways, guys, whatever will be happening on the daily basis, I will keep you posted through these, the daily and the precise updates, precise analysis, probable movement of the S&P 500 from Monday through Friday, if you're my Patreon community member. And if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. And guys, it is not just about these, the daily and the precise updates of the S&P 500, which I give to my community members, Patreon community members from Monday through Friday. I also give the stock market opportunities minimum 5 to 10 every week in the premium stocks of the US stock market to my Patreon community members. So guys, whenever you want to join my Patreon community, I've given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will notice that there are these 2 tiers. So this tier is the daily S&P 500 updates for non-US and Canada residents. This is the daily S&P 500 updates and analysis for the US and Canada residents. So guys, whenever you subscribe to either of these, you will be getting the daily S&P 500 analysis, updates, probable movement, as well as the stock market opportunities minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice that many people have joined my Patreon community for last many days, weeks, months, more than a year or two, and they are getting the daily and the precise S&P 500 updates and the probable movement from Monday through Friday, each and everything, and they know what is about to happen and what can happen. Okay, other than that, the stock market opportunities in the premium stocks. And guys, whenever you want to join my Patreon community, I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here in this, the last point of the agenda, I will give you the probable movement of the S&P 500 for the next week. Now, before that, there are two things. Number one, the CPI data will be published on Wednesday and the PPI data will be published on Thursday. Now, whatever heavy movement, okay, up or down, that can be seen in the market, it can be seen, okay, especially on Wednesday pre-market, okay, before the open of the stock market when the CPI data is published, because the PPI data will not be of much use once the CPI data is published. Okay, so if you are my Patreon community member, then I will analyze the CPI data and I will update you, and accordingly you can modify your trades. Okay, anyways, let's talk about the technicals and let's not speculate on the CPI, okay, or the PPI. Now, what the technical says, technical movement is very simple, very clear, and this will be seen through the Dow Jones. Okay, so what is so special in this, the Dow Jones? Okay, the special thing is that the Dow Jones, the moving averages in the Dow Jones, okay, there is a clear crossover in these the moving averages. Okay, but this can be a trap. Okay, what kind of trap? A bearish trap, not a bull trap. No, it can be a bearish trap. Okay, why a bearish trap? Because if you notice earlier two times, okay, we have seen, okay, this the crossover in the moving averages of the Dow Jones. What it means? Okay, and yes, and at the same time, if you notice that there was no crossover in the moving averages of the S&P 500. This simply means that this time, okay, these two moving averages have come close, or these three moving averages have come closer. If there comes a bearish candle, a small candle of any color, or a bearish candle on Monday, okay, then there will be very good chances, very good chances that there will be a crossover in the moving averages. Once there comes a crossover in the moving averages in the S&P 500, the Dow Jones is already there. Okay, then there will be more crossover in the moving averages, and once this happens, confirmed 100% reversal. That's it. Okay, now to what point, okay, this the reversal will be seen. So if you know the technicals, in that case you need to understand that the boundary of the Ichimoku cloud itself, okay, it works as the support and the resistance levels. In this case, the support level, at most it can come down to 4921. If you remember, okay, I've disclosed this, the number 4921, and this is a very strong support, extremely strong support. Okay, if you notice 4921 here. However, you must remember 4921 is the worst case scenario for the S&P 500, and that will happen only when there comes the confirmed crossover in the moving averages. Okay, and Dow Jones gives absolute crossover, and the S&P 500 gives 2 or 3 means the crossover in the 2 or 3 moving averages. Okay, it may happen on Monday, Tuesday, Wednesday. Okay, it can happen anytime, and if that happens, then that is the only case, only and the only case, okay, where it can happen. Yes, there is one more thing, CPI data. If the CPI data goes against the stock market on Wednesday, and the stock market accepts this the data, means the Wall Street accept the CPI data, okay, acknowledges the CPI data, this worst CPI data, and it gives a heavy candle just like this one, okay, whatever we have seen on Thursday. In that case, that will also suffice this the condition, because that will also force these moving averages to give a confirmed crossover. Okay, in that case, yes, 4921 is the at most, means the maximum fall the S&P 500 can see, and this will be something around 4 or 5%. That is why I'm saying 5% maximum, okay, not more than that. Okay, so that is the condition. Other than that, 50 this the green boundary of the Ichimoku cloud. If you notice, this is 50, 35, 50, 40, 50, etc. Okay, so this is the boundary of the Ichimoku cloud. So whenever it comes down, then it is expected to find support, okay, at the boundary of the Ichimoku cloud. However, if you notice, 5048 5048 was the level that I've disclosed to you, okay, to everyone. And also you can see the impact of the 5048 on 12th of February, that when the S&P 500 moves, okay, it was moving up, okay, in this the straight line, it moved up, hit exactly 5048 and came down. Okay, so some of you might think that I have disclosed the number, okay, after this has happened. But if you have joined my Patreon community, or if you are my Patreon community member, then you will see that this has happened in the month of February, but I have disclosed the number in the month of January, 5048, that any kind of bullish movement will be restricted by 5048. We need two consecutive closings above 5048 so that more bullish movement can come, otherwise a fall will be there. So this means 4921 is the worst case scenario. 5048 is, you can say, a best case scenario, and if we consider a fall, then 3%, yes. Means considering that the CPI data goes against and the Wall Street acknowledges, but the Wall Street doesn't give, heavy fall. So 5048, 4921. Okay. So I hope this is clear. Now let's talk about the bullish condition. As of now, because of this heavy bearish engulfing candle, which has engulfed two candles, there are heavy bearish sentiments. Okay. Until and unless there comes a closing above 5257, 5257, okay, we need one closing above 5257, so that the bearish condition or the bearish sentiments, okay, can be countered, okay, once this kind of closing is seen. And at the same time, if this is realized, in that case more bullish movement will be there. But any more bullish movement after 5257, for any more bullish movement to happen, we need three closings. So I cannot disclose the heavy resistance level, because that is exclusive to my Patreon community members. But let me tell you, we need three closings above 5265, so that a confirmed and a sustainable bullish movement can be seen towards 5300 or even beyond. But remember, around 5300 there is an extremely heavy resistance. Okay, and even if the S&P 500 managed to give three closings above 5265, then also I heavily suspect if the S&P 500 will be able to breach, okay, or will be able to close, or will be able to sustain at that level, and that level can be considered, okay, as the all-time high level for the S&P 500, if the S&P 500 gives three consecutive closings above 5265, okay, and then a fall, there's the bearish movement. Anyways, I will keep you posted, means my Patreon community members, okay, whatever happens, bullish or bearish, okay. But now there is one more very important thing, okay, and what is that? This is the slip. What is that? Slip, SLIP. So if you have subscribed to my YouTube channel for last many months or years, then I've discussed the slip a lot of time, okay. And also guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So let's talk about the slip. What is the slip? Slip says that if two moving averages which were about to give a crossover, they do not give a crossover, rather, okay, they continue the movement. In this case, these two moving averages have come very close, but still there is no crossover, right? Anyone can see, okay, there is no crossover. So if there comes no crossover, rather there comes one more bullish candle, one more, not a normal, not normal bullish candle will not work, okay, we need some good bullish candle. If there comes a good bullish candle, okay, as of now I don't know what will be the number, but once the market opens, once the S&P 500 opens on Monday, then I will disclose the number. That see, if the S&P 500 moves beyond this number, then the slip will form 100% and there will be heavy bullish movement, okay. But if not, in that case a fall. So now if there comes a bearish candle, then most likely, highly likely, there will be a crossover, bearish crossover, okay. Or if there comes a normal bullish or bearish candle, then we'll have to see, Okay, but the thing is that if the slip forms, then 5265 will be breached. As simple as that. Okay, 5265 will be breached, and then the movement will be seen towards 5300 if there comes a slip, right? If there comes no slip, then the S&P 500 is heading to the reversal. Now reversal to what? Reversal to 4921. As of now, let's keep it to 4921. Okay, just 5% from here, that's it. Okay, so that will be the reversal. So now it all depends on Monday, especially on Monday what happens. Okay, whether the slip forms, okay, or if there comes a crossover. A slip means bullish movement, heavy bullish movement can happen. Okay, a crossover means no slip, means a crossover means, okay, most likely, highly likely, the S&P 500 and the entire stock market is going for the reversal towards 4921. Now if there comes a crossover, in that case definitely the Dow Jones will put more pressure, because if you notice a very heavy bearish candle, this is a very small candle, okay, and it was not able to breach even the 50% of this the previous candle. So then the S&P 500 and the Dow Jones, both of these indices will put more and more or the heavy pressure on the entire US stock market, and definitely highly likely it will head, or it will be heading to the reversal. But whatever will happen, whatever will be happening on the daily basis, I will keep you posted through these the updates, the precise updates. And if you have not yet joined my Patreon community, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. And guys, hit like if you have liked this video, and subscribe to my YouTube channel if you have not yet subscribed. So guys, this was my S&P 500 weekly technical analysis for the week of April 8th, which means that from April 8th, which is Monday, to April 12th, that will be Friday.